Thank you very much, Rakesh, and good evening to all of you. And I think it's a real pleasure to introduce this topic, first of all, and of course, a wonderful speaker like Aditya Nain, because this topic, as all of you know, is something that India has done pretty well. I mean, even today, when you go to a little shop and you say, cash loge kya? He says, nahi sir, Google Pay kar do. I mean, you know that something has changed in our country. And maybe thanks to my good friend, Nandan Nilakarni, who started the whole Aadhaar and UID movement. And then we saw the JAM Trinity, which is Jan Dhan, Aadhaar, and mobility come through. And if you look at even today, I mean, I'm on the board of State Bank of India, as you know, most of the payments are happening not through direct payments or even through our own YONO app, but is actually happening through UPI. So the UPI share of transactions is really zooming. So essentially what we're saying is money as we know it or as we have understood it in the past is completely changing. And with the younger generation coming through, I think hopefully we will see the end of paper money and even credit cards going forward. So I think that's interesting. So that kind of brings me to what our speaker is going to talk about today. And I'm really fascinated by you, Aditya, because of three things in your resume. First, of course, we're talking about implementing global strategies using a combination of fixed income, equity, real estate, cryptocurrency, and precious metals. You must tell me what kind of global investment strategies work like this. So that's important. The second, which is really fascinating, is that Aditya has been a professor of philosophy and logic at universities for over 10 years. And even his current work, which is understanding money, the philosophical frameworks of monetary value, and I think the future work he's doing on linking philosophy to money is absolutely fascinating. So I think we are really privileged to have you here, Aditya, and we all look forward to listening to you. Over to you.
Thank you so much. Thanks for inviting me and for having me. And it's extra special because, of course, I know that this is my dad, Dr. Bharat Nain's club. And so there's a long association with this club. So I can see you there, Papa. Thank you for that. So it's, you know, I don't want to shy away from that. That's an extra pleasure and an extra joy to add to this session here today. Because, okay, so do I have sharing rights right now?
You do.
Yes, you do.
Okay, let me try and share this. Okay, just give me a moment. All right, so I just have a couple of screens on, so I'm just setting this up. Okay, so as far as I know, I think we're going to be, I'm going to be talking for about 25 minutes or so, and then maybe 10 minutes of question answers. That's what I think it's going to be. Just let me know if I have that, wrong.
No, I think that's fine.
Yeah. Okay, great. Thank you. So, all right. So, you know, I come to money from two roots, and two distinct roots, really. One is from philosophy, and that's where my, you know, my academic training and a large part of my career so far has been. I've been a researcher and a sort of scholar and a teacher of philosophy and logic at a couple of places, at Symbiosis School for Liberal Arts and at Flame University for the most part. And the other place that I come to money from is investments. And you know, the one from the philosophical angle is that you want to try and understand money, and the investments angle is that you want to try and grow it. And so, in a sense, they're two distinct activities. Of course, the philosophy helps the investments, and the investments also helps keeping track of the monetary space and things of that sort. But I think that's what's unique, if I may say so, about not only our book, which I've co-written with my longtime mentor, and in fact, one of my earliest teachers, Dr. P.G. Jung, who's an associate professor at IIT Bombay. So I think that's what makes our book quite unique in the landscape. But anyways, this is not about the book. And so, you know, when I was thinking about giving this talk, there are a bunch of things you can speak about, and especially in India, because India is so well versed with and so used to digital payment systems and digital monetary systems, much more than I would say North America is. There's so many things to talk about that it's difficult to focus on one thing. So what I've done is, and these days, if you take a sort of a step back and look at, you know, what are the monetary innovations happening out there, what seems to be the most significant in terms of its larger ramifications, you can't get away from Bitcoin and cryptocurrency. And people who haven't been exposed to this space as yet don't quite know maybe why I say that. But people who are in the space are often agreed that despite all the digitization that's happening in payment systems around the world, the kind of change that Bitcoin and cryptocurrencies have brought to not only the financial systems, but also business models and also community organizations is something that's really unique, that hasn't quite been seen before, and is not exhausted by the digitization of payments. And this is something that I'm going to stress on later as well. The Bitcoin and crypto scene is not just about digitization of payments. That's just a given. In a sense, it's not even significant, really. So what I decided to do was talk more about this space, because I know here's where people find it a little difficult to sort of wrap their heads around what Bitcoin is, what Ethereum is, what cryptocurrencies are, how this ties into the larger financial system, and how to think about it. So here's you can read this, I won't read it out, but here's a quote from a 2014 article by Mark Andreessen. So Mark Andreessen, one of the founders and partners of Andreessen Horowitz, investors in early stage technologies, etc. And he wrote this in 2004. And all the words that pop out in this little, passage that I've quoted here, you have mysterious new technology, you have liberation, you have revolution, there's contempt and scorn, people are transfixed by it. And so there's a lot that goes on in the Bitcoin and crypto world that has people confused, has them fighting it on the one hand, but also great adoption on the other hand. And Mark Andreessen, in fact, says that in 2014, Bitcoin could be comparable to what, let's say, the PC was in 1975 or the internet in 1993. So it's something that's extremely significant, not just from a payments standpoint, but from a larger standpoint. Because if you think back to the adoption of the internet, it didn't only change, it's not that people just had websites and then everything went back to normal, but internet took over all our non-digital landscapes. So now most of the workflows and processes are also software-based, digitized, and on the internet. And something similar is in fact happening now with the Bitcoin and crypto space, in that it's eating up into our various non-crypto landscapes, and everything is finding a connect with crypto and Bitcoin. And it's not just about money and monetary systems and payments. So just a few, little sort of information or data points to throw out there right in the beginning. So in 2009 is when Bitcoin was born. So the entire white paper was released in 2008, but the blockchain was sort of launched, so to speak, or begun in 2009. And at that time, there was, of course, no such thing as a globally known cryptocurrency. There was research work that was done in the space much before, but that was really for people and technical folks in the space only. Since then, so in the 11 years since 2009, we now have over $2 trillion in terms of market cap in the space, and over 10,000 cryptocurrencies. And this 10,000 is a conservative number. In fact, if you look at the data today on one of the most popular websites that tracks this, it's over 11,500. So let's say 10,000 cryptocurrencies, over $2 trillion in market cap. There's obviously something happening. And so our job is to try and understand what is happening. And my attempt today is to try and give you a sense in which we can wrap our heads around what's happening in Bitcoin and cryptocurrency. Now, one of the stories that people find really, that gets their attention is what I have on the screen right now, which is a chart which shows the adoption of Bitcoin as compared to the adoption of the internet. Now, if you look at the line on top, it says that the internet took 7.5 years to go from 130 million to 1 billion users, right? So crypto is at that space where we have 130 million users, and this is just Bitcoin. This is not even non-Bitcoin cryptocurrencies. And it's estimated, given the growth rate and projecting that growth rate into the future, that we'll probably go from 130 million to 1 billion users within 4 years, where the internet took 7.5 years. So, if you're looking at adoption as seen as the growth of active Bitcoin wallets or addresses, then the growth is even faster than the internet. So again, obviously there's something happening here that we need to take note of. Now, this is just a little information, a basic chart of the market cap of the crypto space right now, the number of cryptos, and the top 10 cryptocurrencies in terms of market cap. And as you can see, it's not just about Bitcoin. There's also Ethereum, Cardano, and a bunch of other cryptocurrencies that are very significant within this space. Even what are called stable coins. That means dollar-denominated cryptocurrencies that are pegged to the US dollar, which facilitate the on and off ramping of national currencies like the US dollar or the Indian rupee onto the cryptocurrency space, from which traders then use it in order to maintain their cash positions, so to speak. And it also has ramifications for cross-national payments, business-to-business payments, P2P payments, all sorts of payment systems. So not only do you have highly speculative cryptocurrencies, you also have national currency pegged cryptos, which lend stability, so to speak, to the system. Another thing to sort of show us how the adoption has just exponentially grown. Here's a simple price chart. That means a Bitcoin to US dollar price chart. And this is, so if you look at the birth of cryptocurrencies, which was 2009, we have some data really from 2012, 11, 12 onwards. And it's grown, massively. Like the percentage number that you can see here on your screen, 900 odd percent. This is for most people not even fathomable. They don't know what to make of this. They just gloss over it, not knowing what the significance of this is. But basically, it means that if you had put your money over here when Mark Andreessen wrote that article in the New York Times, you would have made a bunch of money by 2021. But this is not really about making money in cryptocurrencies, this talk, but it's just to tell you how it's grown. And the way that, of course, the price works is supply and demand. And so the more adoption there is, the more people get onto the system, the more people that are buying Bitcoin, the higher the price goes. And since the supply of Bitcoin is limited, this is one of those key features of Bitcoin as money. The supply is limited, it's programmed, it's designed to be limited. As supply stays limited and demand increases, the price is obviously bound to go up. And we've seen through the adoption chart previously that demand is definitely increasing. And here's a logarithmic chart. So this smoothens out the edges, so to speak. So from 2012 to 2021, we are now at one Bitcoin costs about 46,000 US dollars, right? So now the key with Bitcoin is, and a lot of people who come to Bitcoin from the stocks world don't quite grasp this in the beginning, but fractionalization of cryptocurrencies is natural to a crypto person. So people who get onto investments through cryptocurrencies find it hard to believe that for the most part you can't fractionalize stocks. So they're like, oh, you mean I can't buy 1/4 of an HDFC stock? That's so sort of backward. So in the crypto world, fractionalization is taken for granted. So you can buy 0.005 of a Bitcoin, for instance, as most people do, because it costs $46,000. And so especially most people, let's say in India, will be buying fractions of Bitcoins and not entire Bitcoins. All right. And another sort of exhibit, so to speak, to show that crypto has gone mainstream as Bitcoin has gone mainstream. And this is a tweet from Visa. So the Visa of the cards, MasterCard, Visa, that we're all familiar with. And Visa has really jumped significantly into crypto over the last few years. They've been building systems, they've been building teams, they've been building sort of use cases for crypto. And they recently posted that they've bought an NFT, a non-fungible token. This sort of JPEGs that are going for millions of dollars these days, seemingly nothing being traded for millions of dollars. But there's obviously something to it. And I've put up a couple of posts on my social media about understanding NFTs and what they are. But they're in it as well. And they've bought one of the earliest NFTs, which is the CryptoPunk number 7610. Right? So I think they paid, I don't know, quite over maybe 200,000 or so, just for this little JPEG of this guy that you see on the bottom left. All right. So one of the things that, especially in India, one of the arguments that you hear about against crypto and Bitcoin is the famous Warren Buffett argument that Bitcoin lacks intrinsic value. And, you hear this from people like Rakesh Jhunjhunwala as well in India. And, in 2016, 2017, this argument was okay. But, if people are still saying this in 2021, they're missing something. Uh, Bitcoin lacks intrinsic value is in a sense true, but as we've shown and argued extensively in our book on money, which I won't get into the technical details of, all assets slash commodities slash currencies lack intrinsic value. There is no object that is intrinsically valuable, that its mere existence makes it valuable. So to give you an example, if you take a stock, the reason, let's say, that you would value an HDFC stock at X rupees is you can use something of a discounted cash flow model where you say, well, the value of the HDFC stock today is sort of the present value of the expected future cash flows, and then you can argue about what you think those cash flows would be based on the growth of the company, et cetera, et cetera. So it's not just the fact that HDFC has shares that makes it valuable. It's expected future cash flows, let's say, that makes it valuable. It's expected future growth of the Indian banking industry. It's the expected growth of the Indian economy as a whole that makes it valuable. So, if for stocks, it's quite easily understandable. So when people like Warren Buffett or Rakesh Jhunjhunwala say, well, Bitcoin is not intrinsically valuable, all they mean is because they're stocks guys, they're equity guys. They mean, oh, we can't understand it in the same way that we're used to understanding equities. It's not a business, right? But guess what? Gold is not a business either. But gold has investors. Real estate can be a business, but is not a business. So a building itself is not a business, but it has investors and it has value. Sorry. So how do you value real estate, right? Again, you can look at cash flows and say that, well, in terms of rental cash flows that are expected, or in terms of the appreciation of the land and the structure that's built on it, and therefore real estate has value. So then, we understand how stocks have value, we understand how real estate has value. There's nothing intrinsic about it. It's based on certain external conditions. Take, for instance, the US dollar or the Indian rupee as well. So we often think that these are valuable, but they're valuable because the state says that they're valuable, which basically means that you and I have to make payments in those currencies. And most importantly, we pay taxes in those currencies. So historically speaking, the fiat currencies or national currencies only becomes significant when it's declared that you can pay taxes in them, because otherwise nobody wants them. And so that's how national currencies become important. So Bitcoin too is valuable. The question really is not whether it is or is not intrinsically valuable, but how we must think about its value. Right? And there are a few ways in which you can think about Bitcoin's value. One is what it accomplishes that, let's say, the traditional banking system or the traditional monetary system does not accomplish. That's one. And we may get into a bit of that in some time. The second is, what's the adoption rate and what's the community growth looking like? Right? So are people adopting Bitcoin? And if people are adopting Bitcoin, then the system, at least for whatever it's worth, is being used. Right? And then use cases, of course, the fundamental use case is either holding it as an asset, let's say like gold, or transacting with it like money, let's say with the rupee or with the dollar. How else can we measure its value? You can measure it by the security of its code base. How strong is the code base, the Bitcoin core code base that is deployed in order to make this system run? The other is the strength and growth of the development or the developer community, right? So the developers, software developers who are using Bitcoin and the Bitcoin system, is this community growing? How is it growing? And various other sort of what's now called layer 2 communities. That means systems and softwares built on Bitcoin. Are they growing? What are they doing? So that really brings us to this second notion that people have against Bitcoin when they struggle to try and understand it. And this is one of the points that was brought up earlier, is that we already have digital payments. So do we really need Bitcoin? And this is especially true in India because of India's success with digital payments. So in my experience, that means of India and Canada, I don't have much US experience with this. But when I came to Canada in 2018, I felt like I was going 5 years back in terms of digital payments coming from India. right? So because of India's sort of this payment stack with, with Jan Dhan and Aadhaar, etc., and UPI and whatnot, payments and digital payments have become so they're taken for granted in the sense that, well, obviously you don't carry cash. Like I remember not carrying cash 6 years ago in India. I made only card payments, Paytm payments, things of that sort. And maybe 2 years ago in Canada, I stopped carrying cash because before that you needed it for a bunch of things. So if we have digital payments, people say, then do we really need Bitcoin? And the answer really that I would try and get people to think is that, well, Bitcoin is not really about payments. It does facilitate payments. It is fundamentally, at least historically speaking, meant to be a monetary system, but it's the design of that monetary system that makes it unique. So the fact that it's decentralized, that means there's no central authority like the state or the central bank that controls it. The fact that it's permissionless, meaning nobody has to give you permission to transact on the Bitcoin blockchain. Again, no central bank, no intermediary commercial bank that intermediates transactions. And the fact that, through various technological innovations, it has managed to make the record of transactions immutable. That means it's a secure system. Once a transaction happens on the system, it can't be reversed, and a few other technological innovations. So it's not just about payments. And so when central bankers say, well, when we have central bank digital currencies like the Indian rupee digital version or the US dollar digital version, we won't need Bitcoin. These are central banks really trying to buy time in order to figure out regulation, because if they understand Bitcoin, they don't believe that themselves. It's about much more than digital payments. And I think India's success with the traditional payment system will also be a hindrance to its adoption of crypto. Because in North America and Europe, for instance, where payment systems have not been great, to be honest, these innovations have been adopted much quicker. For obvious reasons, because they needed something that worked in a digital world that was digitally native. Right? One other point that people bring up is that, well, if we have national currencies like the INR or the USD or the Canadian dollar, these are stable, but Bitcoin is not stable, and because of supply and demand, it's highly speculative, so the price keeps going up and keeps going down. Well, and here's something that we talk about technically in our book as well, but I won't get into the technicalities of the argument. But the point is that all economic value is relative. Nothing is stable. And how can we wrap our heads around this? The fact that the Indian rupee is what we call stable, or the US dollar is stable, is because it is kept stable. It is managed by the central bank. And their entire, in fact, the job of the central bank, if you step back and you forget interest rates and this and that, the job of the central bank is just to keep the national currency as stable as possible. That's it. Right? Now, Bitcoin doesn't quite have that as yet, at least. Because if you look to the history of national currencies, whether in the US or India or anywhere else, you see that the centralization of these currencies is quite new. It's an innovation of the early 20th century. Before that, you had a whole bunch of private currencies and bank-issued currencies that circulated in the economy. And these were not centrally controlled. And so their value did move up and down based on, let's say, the credit worthiness of the institution that issued that money. So here's a tweet, sorry, not a tweet, but a LinkedIn thread that I put up a little while back. And if you take a look at this, paragraph at the bottom, I've said that currencies like the USD or the CAD or the INR are not stable in a significant sense. They're only stable in relation to themselves. That means $1 US is always equal to $1 US, right? Which is obvious. That's what in philosophy you'd call a tautology, which is that, yeah, it's obvious, but it has no informational value. So which is like saying you always look the same as yourself. Is that true? Yeah, I mean, it's true. You always look the same as yourself because you are yourself. But is that really significant? No. So if you measure the USD in USD, then of course $1 USD is always equal to $1 USD. But if you measure, let's say, the Indian rupee in USD, then you'll see that it's not stable because the Indian rupee has historically been losing value against the dollar, for instance. However, you can also think of, let's say, the US dollar in relation to, US real estate, where you can see that real estate inflation is rising at a at a significant pace. And so is the US dollar stable with regard to real estate prices? No. So, the sort of larger conceptual point here is that whenever we measure something's value, it has to be measured in something else. One of the points we pick up from an earlier thinker in the book is that, price is like distance. If something increases in value, its corresponding thing decreases in value. So if you're moving from point A to point B, if you move closer to point B than to point A, that means your distance in relation to point A and to point B has changed, both of them. So for example, if you say that housing prices of India have increased, it means two things, and this is important, which a lot of people don't get. It means that houses are more expensive, but it also means that the rupee is less valuable, because houses will only be expensive in relation to the rupee, which simultaneously means the rupee is less valuable and houses are more expensive. So national currencies also move up and down. The only reason they're stable is because we make them stable through a concerted effort of the central banks. And if, I'm not saying this will happen, but if in the future there is some such thing as the Bitcoin standard, like how we had the gold standard, like a global currency that is based on a layer one Bitcoin, you may have a system whereby there's some sort of currency stability pegged to, let's say, the price of Bitcoin, for instance. And these are just, thought experiments, which may or may not come true. I'll just skip this and move ahead a little bit. We often think of money as a thing that, because we're used to, let's say, having notes of paper in our hands or coins in our hand or credit cards in our hand. And we think of the object that is representing money, notes, coins, paper, credit cards, as being money itself. But, money is better thought of as a system. That means it's a system of credit which people use in order to, make payments of all sorts back and forth, at least. And this is a picture of an island called Yap. It's a Pacific island, YAP. And these stones outside the house are, in fact, their money object. And this is really weird for a lot of people to get, but just like we have, cash, they have these sorts of things. Now, the idea is over here that, this object is not really going to be handed over to someone else to make payments, but this object is a symbol of credit worthiness, so to speak. Right. So as long as people, so the larger and the more numerous stones you have, the more wealthy and the more credit worthy you are in the Yap Island economic system. So money has always been a sort of system, and it need not be pegged to a specific kind of object. And I won't have time now to get into the details of the significance, but I just thought I'll put this out there for us to change the way in which we think about money. Okay, so I'll quickly wrap up. We're coming to 25 minutes. So not only is that just Bitcoin, as I showed you right now, but there are other cryptocurrencies as well. And one of the points we make in our book, again, which is taken from another thinker on money, is that money is basically what it does. There's no such thing that is previously given to us, which is money, and then we just use it. But we make it. It's a social technology, meaning that we design it and we program it. Right? So money is what it does, but what does it do? So primarily, anything that can at least function as a medium of exchange, we would minimally say is money. And historically, there have been three functions of money, that we think of it as: store of value, medium of exchange, unit of account. And Bitcoin, functions as all of these. And not only does it function as all of these, but Bitcoin and other cryptocurrencies offer us a lot more as well, which is why they're significant. Decentralized applications are built on them. NFTs or non-fungible tokens, which we can talk about, are built on them. You can have specific alternative or complementary community currencies and tokens. So the PSG, the football team, PSG, I think where Messi has recently gone, they have their own community token now, which functions on the blockchain. You also have decentralized finance now, which has made a massive splash in North America. Because in North America, interest rates and yields on fixed income are very low. So people are now finding ways in which to get yield from their cryptocurrencies. And we can get into that as well if there are questions about that. But there are a bunch of things that can be done with cryptocurrencies that you couldn't do with the previous system. I'll just skip over this for some time. Right. So I'll just quickly, in a minute, wrap up here. So we've seen that there is adoption, but with adoption, obviously comes regulation. So what are we going to probably see in regulation? So in 2017, we were on the leftmost panel, right? That means governments thought, hey, let's just ban this, or let's say we're banning it and hope that it vanishes. They obviously didn't understand the technology at that point in time because you literally can't ban it. I mean, it's not bannable technologically speaking. The second aspect is that, okay, then they realize, well, okay, we can't ban it, and maybe we don't want to ban it because there's a lot of innovation here. Let's at least figure out how to tax it. And most countries have now figured this out. The latest in India is that they're mostly going to treat Bitcoin as a commodity. So it'll be taxed as a commodity would be. And the third phase, which is really, okay, we're taxing it, that's fine, but let's bring in some specific regulation to sort of accept it, understand it, and create a space for it. India now is in this third phase. So is the US. But in my, as per my understanding, we are not going to see any successful, meaningful regulation that really treats this subject exhaustively, at least for another 3 to 5 years. I don't think the regulatory systems and frameworks are uh, are able right now to deal with this in a significant sense. Okay, so I'll end the talk over here. Hope that you got something from it, and back to you. Thanks.
Great. Now we can have some question answer session. Sanjay ji, if you can please moderate on the question answers.
Yeah. Aditya, if we can have the screen down so that
Sure.
I can have. Anyone has any questions? Oh yeah, Vikram's already put a digital hand up. Yeah, Aditya, it was a very good talk, and even knowing so much about Bitcoin, I still learned a lot. So let me ask you one question, and then I'll give it to Vikram. This Bitcoin, why did it fall then? If you're saying that it is stable and everything is there, recently it fell by 50% of its peak value.
Yeah.
What was the reason?
Well, reasons. So for a couple of things. Firstly, I'm not saying that Bitcoin is stable. It is not, because it's completely market driven. What I was saying was that even national currencies value rises and falls until we made a system with the central bank, which is supposed to keep the value as stable as possible. So if Bitcoin is to become money, and my view is that Bitcoin will not become money in most places. It will find other uses as property and as an asset, but not money. If it is to become money, then we'll have to find a way in which to stabilize it with regard to some other currencies, right? If that sort of a system is to come up. But the reason it falls is there are various reasons, like with the stock market, the crypto market also falls. And then after it falls, people find reasons. Right now, a couple of big reasons were the Chinese banned mining of Bitcoin. And so there was some fear based on that. But really the market had run up a lot and it was just looking for an excuse for a correction. And I think the Chinese ban on Bitcoin was was one trigger. But since the fall for 50%, it's also risen 50%.
It's risen, yeah. but then the mining is till 2024. They have restricted the mining to only a certain amount, not more than that. So that is also there as of
Bitcoin,
now.
Yeah, so the Bitcoin mining trajectory of how many coins there are, how many will be mined, and the schedule for when the coins will be mined has all been laid out in the original design in the white paper. So now most of the coins have been mined, but now on a decreasing scale, they'll continue to be mined until I think till 2100 something. But that is so if you speak of it from an asset/investment perspective, that is one of the things that Bitcoin has going for it, because that means that the supply is limited. So as long as the demand continues to increase with limited supply, the price will rise. The price will not continue to rise if the demand falls for some reason. Right? And I'm right now not able to see what is that big that could affect the demand side so significantly.
Okay. Thanks a lot. Thanks, Aditya.
Thank you.
Yeah, Vikram.
Hi, Aditya. I think that was a very nice talk and very informative. I have two questions. Number one is, if we say that, as people say that there's no intrinsic value and all, no value, and how do we actually go about it?
Sorry, Vikram, you are not audible.
Vikram, your connection is a problem.
Okay, how is it now?
No,
Is it better now?
No.
Okay.
You switch off your video.
Yeah, switch off the video.
I've switched it off. Can you hear me now?
Yeah, now it's proper.
All right. So my question is that if there's no intrinsic value in crypto, then how does one go about using it in everyday life? For example, how do I hire a person and say I'm going to pay you a salary of XYZ bitcoins? Because the value of bitcoins rises and falls. It's so volatile that I simply cannot use it. There's no stability. That's my first question. And the corollary to that is, then how stable are public ledgers, and what stops a government, for example, ordering that all public ledgers are now outlawed or banned or destroyed completely, and therefore people lose value overnight?
Yeah. Okay, so thanks for that. I'll take the first one first, which is the payments in Bitcoin, right? Because suppose I come and say tomorrow that, okay, I'll take payment in Bitcoin, and then, it falls 50% tomorrow, then I'm 50% poorer than I was yesterday. So that is the issue that we're talking about. Now, the workaround for this is where we need to take the entire crypto space into account, not just Bitcoin. So I mentioned something called stablecoins, which are basically currency pegged cryptocurrencies. The biggest is what's called the Tether US dollar, or the USDT. Which is a US dollar pegged cryptocurrency. So it's a blockchain based cryptocurrency, but its design is such that it's meant to be pegged to the US dollar, which means that one tether is always equal to one US dollar. So what people in the payment system are doing now, and because I'm on the crypto ecosystem, I do make payments every now and then for something or the other in crypto. Payments are usually made in stable coins now, not in Bitcoin or Ethereum. So someone will say, I'll take payment in Tether or in USDC, which is another type of stable coin. And so what you have is an on-ramp onto the crypto space, which is stable to the US dollar, which you can then deploy into Bitcoin if you want to hold it as an asset for long-term appreciation. So you get the best of both worlds, the stability of the dollar or the rupee plus the asset like Bitcoin.
Yeah, but as a currency, we are actually defeating the purpose of cryptocurrency by pegging it to the US dollar, because then we are finally trading US dollars. That's the underlying asset, and the number of stable coins will vary based on the US dollar. So I haven't found a real answer to that final question as to how this will actually become a currency.
So, yeah, sorry.
The second second question that I wanted to ask was that why not use crypto as a fiat currency? Because then everything becomes very simple. It becomes trackable. It becomes taxable. It's not counterfeitable. All the problems that are associated with fiat currency, all the negatives of fiat currency are actually beaten by crypto. And the big problem with crypto is that its value is volatile because of the supply and demand situation, or the perceived supply and demand situation. And if it's used as used as fiat currency, then it's obviously pegged to the underlying GDP or the intrinsic value of one unit of that country. So why not do that?
Yeah. So I'll come to the banning public ledgers risk first, and then to this. So what governments can do, I'm not a technologist, but my understanding of the technology, and I could be wrong on this, but what governments can do and can't do, they cannot ban a public ledger like Bitcoin. Like, technologically speaking, they would basically have to say that it is illegal for you to run a node, or it is illegal for you to mine, or it is illegal for you to hold cryptocurrency. I don't see any country in the world wanting to do this anymore, because Bitcoin is a big wealth creator now. And secondly, it's a massive headache to say that you can't hold it. So are they going to go into people's rooms and see what they have on their wallets and exchanges? I don't think that'll happen. That's one. But what they can do is the governments can create headaches for on and off ramps, and they can tax it heavily. So an on-ramp is, you have a, CoinDCX or a WazirX or a ZPay account, and you need to get INR on there. So you need an on-ramp and interface between, your banks and the crypto exchanges. And every now and then, banks give, headaches to crypto exchanges because they think that the government's going to crack down on them. So this on-ramp and off-ramp is the real danger that I see. I don't see governments being able to do anything really literally apart from that. What they want is taxation, and where things are going now in most parts of the world is Bitcoin is being looked at and thought of as a commodity. So it will be treated regulatorily as a commodity, and it will be taxed as a commodity, because in that way, the government wants control on money. So they don't say that it's money, they say that it's commodity. So you create an ecosystem for it. There's an existing regulatory framework to deal with commodities, and then you tax them as commodities. The third part about why not make fiat currencies on a blockchain, that's being explored by various central banks, what's called central bank digital currencies. They may or may not use blockchain, is what they're saying, based on which central bank it is. But I suspect many central banks will issue fiat currency that are blockchain based, which disintermediates to an extent the banking system, which basically gives the central bank complete control over money supply, which takes out a big headache, which is not good news for the banks. But many central banks are also saying, well, we'll work with the banks in order to deploy all this stuff. I think that will take care of the payments and the tracking and taxation issue, as you're saying. But there are certain more fundamental points about Bitcoin that fiat currencies don't have, which some people really like and some people hate. So this is the big political divide in crypto. If you're someone who believes in the future of decentralization and permissionless blockchains, and if you feel that government intervenes too much in your life, then you will possibly like the other stuff that Bitcoin offers that fiat currencies won't offer. So I think for now, I'll leave it there. We can always discuss this more later.
Yeah.
Thank you.
Adi, you have a question?
Yes. Hi, Aditya. This
Hi.
is Aditya here. Yeah, I have a question one. So recently, I have heard news that many countries are now releasing their own digital currencies, which will function like Bitcoin. But
Right.
I have a doubt here that I've invested some of my money in Bitcoin and other cryptocurrencies. So will that affect Bitcoin in any way? Because I don't know, because the base of Bitcoin is huge as of date, right? And cracking down on it may not be reasonable, but still I'm a bit doubtful in that matter. Like, okay, will that investment will go to waste, or what will happen to that?
Right. Okay, so I'll just preface this by saying this is obviously not investment advice, so please do your own research. But having got that out of the way, I think a couple of things. In my view of this, I'm not alone, but in my view of this, central bank digital currencies will most likely affect stablecoins, what we were just speaking about. The US dollar pegged stablecoins, euro pegged stablecoins. I think because regulators are most concerned about, if you hear the noises that regulators make, they're most concerned about USDT, USDC, euro pegs, these pretend national currencies. So they will do whatever they can to disrupt these pegged coins, stable coins. But in my view, central bank digital currencies do not have the fundamental novelty that Bitcoin has. That means, it's not permissionless, it's not decentralized, because it is centralized. So the reason that people went on to Bitcoin is not in any way sort of the central currencies will not fix that. So I don't think it will affect Bitcoin's value. In the short term, of course, value keeps going up and down, so it will have massive crashes and run-ups. But I don't see central currencies affecting that.
Okay, so is it possible because I have recent news that a few Caribbean nations have already adopted Bitcoin as their mode of payment. So is it possible in future that countries may adopt Bitcoin servers or Bitcoin system as a mode of their currency?
So yes, and this has already happened in one country. So El Salvador recently made Bitcoin legal tender, which basically means, and this is the only country so far, which means that it is at par with, so they work on the dollar. So now they have the dollar and they have Bitcoin. So it's a parallel system of currencies where people can make payments, and they actually do this, and it's working so far. We'll see what happens of it. But other countries as well, especially poorer countries that are looking for a great monetary leap, will move to Bitcoin. So countries for whom, let's say, the global financial system doesn't work very well, countries that are really struggling to, bridge this poverty gap, a lot of them will go to Bitcoin. And you'll see, in my view, a lot of the smaller countries' central banks holding Bitcoin on their balance sheet in the same way that they hold gold right now. So, central banks buy up a lot of gold, especially recently they've been doing that, and they've been doing this for a long time. But I wouldn't be surprised if even in a few years, you have smaller currencies, Caribbean, non-Caribbean, but smaller countries, that hold Bitcoin on their balance sheet. US S&P 500 companies are holding it on their balance sheet. It's just a small leap now for countries to do it.
Yes. Okay.
Yeah. Rakesh ji, you have a question? You're muted. Rakesh ji, you're muted.
Bharat sir wanted to ask question. Bharat ji, you had raised hand.
Oh, I am sorry, I missed it.
Yeah, Bharat sir, you are on mute.
Bharat, you're muted, Bharat.
I wasn't asking a question. I wasn't asking a question.
Okay,
fine. Anyway, Aditya, I have one question anyway. See, every product, when it comes up because of the weakness of the existing product. Is that the reason that cryptocurrency has come into existence? And secondly, if this is the product of the weakness of the existing system, then was not there any way that existing system could have been strengthened rather than to put one speculation product in the market?
Yeah, so Bitcoin is used for speculation a lot, but it wasn't meant to be a speculative product. So that issue is there, and it is a concern. So Bitcoin will not be money until it is stable. So that is a concern. But the reason that really the problem that Bitcoin was meant to address is the massive printing of money by the central banks, and really that is it. So the more central banks print money and keep interest rates low and buy bonds and quantitative easing, the more money that's flushed into the system, the more the currency is devalued. And because currencies are being devalued so fast, especially in Japan, in the US, in Canada, in Europe, not quite in India as yet, Bitcoin was meant to be a replacement or an alternative to that. I don't see this changing anytime soon, because central banks have realized that they can print as much money as they want, as long as they have a strong military and they are a reserve currency of the world and things of that sort. So the more they continue printing money, the more the dollar will get devalued, the more valuable Bitcoin will become. In India, interestingly, the central bank has done a pretty good job of maintaining the value of the rupee. And so not compared to the dollar, but at least compared to the internal commodities and real estate and things like that. So people don't see the need as such for Bitcoin. And there are also some other social and political reasons that India will adopt it, I think, slower than the West. But I don't see any other alternative, any way the existing system can be fixed, because the existing system is going further down the track that Bitcoin was trying to fix.
But then valuation, devaluation, overvaluation, you may say it is a relative term towards the existing currency. So that will anyway remain there. It is not going to address that issue. Because if I'm measuring it with the USD, or I'm measuring it with Indian rupee, or measuring with Japanese yen, if Japanese yen gets devalued, but obvious cryptocurrency will also get affected. So that is not going to affect the existing system, which is showing valuation on upper side or lower side. So this is not going to address that.
By existing system, what in the crypto world, when you say the existing issue with the current financial system really comes down to one thing, which is the increased printing of money, and therefore the devaluation of fiat or national currencies, which basically means that real estate in America, the prices are running away. because real estate is getting much more valuable, whereas the cash that you hold in your bank account is becoming less valuable because there's more supply. This is really the one basic issue, macroeconomic issue, that Bitcoin is meant to counter with regard to the supply and the value of it. There are certain things that the existing system can do, but those will require it to take money out of the system, or not supply as much money into the system, which are macroeconomic issues. I don't think you can get into all of that, but I don't see those happening.
Yeah.
Yeah,
I'll take Ruchi. We'll take the last question, Rakesh ji.
please.
Yeah, Ruchita, you can go ahead.
Yes, am I audible?
Yes.
What I wanted to actually ask is for people who are sort of, who just started earning and are looking to sort of invest maybe into the cryptocurrency market as well. Do you have any sort of advice for them?
So I would say, just generally speaking, the same principles of investing apply to crypto as well. So if you're looking at it as an investment and not concerned about anything else, so, the same risk management tools, that means, don't invest anything that you can't afford to lose. Don't invest anything that you need within the next couple of years. Invest only money that you are willing to see rise and fall by 50 or 100% rises and fall by 70%. As long as you can stomach the volatility, it's a very volatile asset. I do think, and this is my personal opinion, again, I can't give advice, but I do think that for a young person, especially someone who's digitally native, crypto is an essential part of the portfolio. If nothing else, to fight inflation, home prices, and educational prices. Education and home prices, if you keep money in your bank account, there's no way you're going to be able to maintain purchasing power. The only two options are investing in stocks, high growth stocks, and investing in cryptocurrency right now. These are the only two things that keep up with real estate prices and education prices. So for someone who's looking to invest long-term, I'd say you definitely need to look at this. Then there are questions of which exchange to use and which cryptocurrencies to buy. I mean, that you can get in touch with me separately for that, because that takes a whole other conversation. But, tried and tested old investment practices work in the crypto space as well.
Yeah, thanks a lot, Aditya. Rakeshji, back to you.
Thank you, Sanjay. Thanks, Aditya. So now to propose a formal vote of thanks, I'll request Rotarian Vikram Puri to please.
Sure. Well, Aditya, thank you very much for your time today. I think it was extremely informative, and lots of us who know very little about cryptocurrency have obviously learned a lot. But I think that the two takeaways that we found was one is that if central banks do adopt crypto, they won't be able to just print crypto just to combat, just to increase the supply of money. And the other thing is that Bitcoin is simply not money as of now. It's an asset. It's a commodity, and it needs to be linked to something in order to determine its value today. But our expectation from any currency is that it has its own intrinsic value and it has its own underlying and is not linked to another currency. But unfortunately, I think most currencies in the world are linked to major currencies, and they derive their value from there. But the one thing that I believe and I think should happen, should crypto be adopted, in a widespread manner, is that if you look at all the drug money and the gun running money, and these are all right now the currency of choice is the US dollar, and billions of dollars are changing hands in cash, and nobody even knows whether those currency notes are even genuine or are they counterfeit, because there is no way to validate them or verify them. I mean, drug smugglers don't go to banks, and they do go to launder them, but it's very difficult to validate that. With crypto, every single fraction can be validated and can be verified. So I think that's a huge gain and a huge potential that probably needs to be exploited. But thank you very much for spending your time with us this evening and certainly enlightening us. I think lots of us are going to now go out and look for investments in crypto. We have those, this is like the stock market was in the 90s when every guy and every shoeshine boy was investing in the stock market, and he had an opinion on which stock to buy. And we see that happening with cryptocurrency. So I'm sure a lot of our members and a lot of our audience are going to connect with you just to understand what they should be doing in order to become billionaires.
Yeah, sure. I mean, happy to have conversations with people one by one. Thank you so much, Vikram, but also thank you so much to everybody else, each and every member of the club for having me. I really enjoyed this, and hopefully you got a thing or two out of it. Thanks a lot.
So thank you, Aditya, and thanks to all the guests who joined and they motivated and contributed in this talk. So thank you, everybody. So can I now close the meeting?
One-liner, Rakeshji.
Oh, yes. Sorry, I forgot it. There are two things. One is a joke from Mr. Sandeep Bash to make it more enjoyable.
Sandeep has left early, sorry.
Sandeep has left?
No. Yes, he's left.
Yeah, maybe he left, yeah.
But then
Vikram
is there. Vikramji is there to give us the one-liner.
Well, it's a cliche, but I think it applies here. These are the two emotions that are going to drive Bitcoin: fear and greed. So that's where I think that's the thought I'll leave you with. Either you're going to buy Bitcoin because of fear of being left out and losing out on inflation, or because of greed, because you heard about the neighbor who just made $100,000 because he bought a couple of Bitcoins a few years ago. Thank you very much.
Thank you.
Thank you, Vikramji. Thank you so much. So now we'll call the meeting.